In Consumer Corner, we take a look at trends creating a buzz online in China. On today's show, we'll look at the renminbi appreciating outside of China while depreciating inside, and see what Chinese internet users have to say about it. China made major changes to its currency policies in 2005. At the time, the renminbi was trading for 8.3 renminbi to $1. Since then, it's gotten stronger on the dollar. It's appreciated at a pretty steady pace, which has led to a lot of criticism abroad. There has been a lot of debate about China allegedly manipulating its currency to improve its export figures. The rate has gotten below 6.1 to $1. That means that during the past 8 years, the renminbi has appreciated more than 35%. If the renminbi appreciates, then the currency is getting stronger. A stronger currency will make it easier for people to buy foreign products. Like a pair of shoes that once cost $100 would sell for 830 renminbi. But if the currency appreciated, then a $100 shoe would sell for a lower price. In this case, it would be about 600 renminbi. A stronger renminbi also means that items are more expensive in China. So Chinese people should be using their renminbi to buy items from abroad. But getting access to foreign products is hard in China. It's also difficult for many to leave the country. They're stuck buying products in China, which are more expensive now. Data from China's central bank shows that in 2005, the total amount of China's broad money, or M3, was less than $5 trillion. However, in April 2013, this number surpassed 100 trillion yuan, and it reached 107.9 trillion yuan by the end of last November. During the past 8 years, China's broad money has tripled. This also caused inflation in the country. From 2005 to last year, the average annual CPI during these years saw an over 3% increase. The prices of some products have doubled. With the renminbi depreciating domestically, there are more expensive products than before. So the money doesn't go as far as it used to, and living expenses seem higher. Take 10,000 yuan as a reference point. Between 1985 and 1988, 10,000 yuan made up 130 months of salary for the average Chinese SOE worker. However, in 2012, the same amount of money was only equal to 2 months' salary for the employees at an SOE. The declining purchasing power in China is also something to look at. The average price of rice in 2005 was about 7 US cents per pound. Last year, it rose to 12 cents per pound. Spending 10,000 yuan could get nearly 120 pounds of rice in 2005. But in 2013, the weight declined to less than 70 pounds. That's an over 40% drop in 8 years. The renminbi's depreciation inside makes it rational for Chinese people to invest their money to avoid having assets shrink. Houses are a popular investment choice. People treat houses as an investment rather than as a place to live. As a consequence of that, housing prices continue to go up. The rapid increase in housing prices plus renminbi depreciation has made houses more expensive. So those looking for a place to live are struggling. So why is this happening? As Economic Information Daily reports, China's current economic structure is still heavily reliant on imports. The huge trade surplus brings US dollars into China. However, China's central bank only allows printing renminbi to match the US dollars coming in. The more US dollars that stay in China, the bigger the monetary base will be. This also leads to price inflation. Since the 2008 economic recession, the Chinese government announced to provide a 4 trillion yuan stimulus plan. Provincial and city governments got loans from banks to develop infrastructure. This lets China's M2 rate stay above 13%. But this investment-led approach has come with its fair share of problems. Chinese internet users complained about the situation on Weibo. One wrote, quote, "Imports and exports are mainly using US dollars to make payments. We get US dollars first and then exchange them to renminbi. This creates huge losses when the renminbi appreciates outside. We ordinary people have to suffer from all of this, unless we immigrate to other countries or travel abroad." Another Weibo user agreed, quote, "I don't think it's a bad thing for the renminbi to appreciate outside. At least we can spend less to buy what we need from overseas." However, some Chinese internet users don't think renminbi appreciation outside will benefit Chinese people. One wrote, quote, "Most Chinese people barely have the opportunity to travel abroad. How will these people be motivated to earn money? If the renminbi depreciates inside, even for those rich people, can they stay in foreign countries forever?" Finally, a Weibo user sarcastically said, quote, "We used to hope that we would work in the US to earn a higher salary and live in China to spend less. However, the situation has changed. Now we like to work in China and spend money in the US." Experts believe the renminbi will continue to appreciate in 2014. This implies that the renminbi to US dollar exchange rate will fall below 6. If China is seriously interested in a market-oriented approach to its currency, then will have to allow it to float more. This would very likely lead to depreciating abroad, which would hurt exports.